Morning. Happy Monday, Stocktwits Nation. It is Monday, April 14th, the day before tax day. We had a wild week here with Howard Lindzon, the big boss, and Shay Boloor. How are you guys doing? Did you get to watch some golf this weekend? Settle down a bit?
I am wearing green underwear right now.
Am I?
Green shirt for the Masters, so we are all for it.
So I was watching it and I was not interested until I became acquainted with one Mr. Bryson DeChambeau? And now I'm like the biggest. I'm like, yeah, I'm like,
You had
yeah.
never seen this man before?
Never seen him in my life, but I was at a bar with my friend and like every woman in the bar was just like, who is that? And then he choked. So
Okay, well there's a let's get into this. This is now creating golf VIX. Now you've upped the golf VIX to 60. So Bryson, he started a company. I was wearing the shirt. This is just look it up. He started this company, LA Golf. He's a nerd. And my son and I and some friends are investors, and he built his own golf clubs. He's an engineer. He's a geek. He has a great YouTube channel. Katie.
Bryson is?
Yes.
No way.
Okay, listen. If you gotta do lady stuff, just not right now live. The thing about Bryson is he's a geek. He went from hated to loved very, very quickly.
I mean, who hated him? It was probably just jealousy, if I'm guessing.
He had this little bad boy persona, right? Shay, like Shay has right now. And going on Fox and CNN and everything. But anyways, what's super interesting about Bryson is an incredible entrepreneur. He's a meaty. He has a couple million followers on YouTube, and he started this golf company, LA Golf, with a really good businessman, and they're building their own club. So he's this huge following. In person, he's a lovely guy and young. He's only 31, incredible businessman. And I would say he didn't choke. I think he just didn't have his game. Like this guy takes. I think what was the most incredible about this is you had Rory, who was a mad. Just love passion, historical passion of the game. They both do, but you could see the differences in their game yesterday. Rory, you could just feel how bad he wanted it, and Bryson, as much as he wanted it, was really just struggling. He just didn't have his game.
Yeah. I mean, what I took from that, Howard, is you have the ability to put me in a group chat with him. So if you want to just like tee that
I have
up.
the ability, but I'm nervous. I don't think I get a little shaky with him, and I think I just think you're not ready.
I
think
can
we'll have
handle
to spend
it.
a little more time together before I hand you over to a group chat with Bryson.
But by the way, I love the way that how he's like humanizing VIX. I think like in future arguments with my fiance, I'm gonna tell her like my VIX is at 50. You better chill right now.
Yeah.
I can't believe you don't already do that, Shay. Seems like something
Here's
you'd
the thing
already
about
do.
the VIX that's important for young people to know. It's only important. This is what's cool about the VIX. It really doesn't matter about once a year, once every few years, right? It doesn't matter if the VIX is low when the VIX is high. Therefore, it's such an important thing when it's so precious when it's high because it creates so much change that you can apply to many life situations, kind of like Seinfeld.
Yeah,
I was thinking about George Costanza. If Seinfeld,
You
was doing
can't
Costanza
handle the
now,
VIX. You can't handle the VIX.
I mean, that's a good segue into the social VIX. So Howard, you want to tee up the social VIX? We got something called the social VIX on Stocktwits. By the way, speaking of being social, you guys were so chatty in the chat last week, and it was so fun. So I have it up. Keep your comments coming. Tell us what you think we're saying in real time. Drop tickers. But Howard, can you share the social VIX, what that is with us, and how people can follow it?
First of all, social VIX is something there's been the VIX indicator. I will let Shay and you explain it, but the VIX is a measure of volatility, right? And when the VIX rises, like it was last week, and I shared on my show and my newsletter, Monday it was like, hold your nose, buy some stocks. I told my daughter, my wife, same thing. They didn't. By the time you explain it to them, you just say, honestly, honey, you're just gonna have to trust me. Buy the QQQs and the SPYs, and when the VIX is at 20, check the prices again, and your stocks will go up. So I've been fascinated since I started Stocktwits because we have 1 million people, women, men, traders, investors, that leave bullish and bear notes on Stocktwits. So it's a very focused audience. And I've always been wondered, and we can pull it up maybe, but I've always wondered, can people that are talking about stocks, not necessarily just indexes, be a leading indicator, or how closely does it follow along with the VIX? So it created something called the Social VIX. It probably won't be the final name. And we went back through all our data, and we went back as far as 2018 so far with AI and with some machine learning and some humans. And what's important for this chart is to see when it crosses both on the way up and on the way down through one, right? Because it shows some velocity and intensity. And you can see in early 2025, where we had a very subdued, everybody thought there was going to be the Trump bump, and we were getting the Trump bump. And volatility was very subdued beginning of 2025. And then we started to see stocks break down, and the average person in the indexes were still doing fine. And probably about February, it crossed over one. And no one necessarily knew what that meant, except the people just trading were starting to get stopped out of things and starting to get a little more bearish. And then you can see the extreme spike, the extreme fear that kind of correlates with the VIX, the regular VIX, right, with the volatility. And here we sit with an all-time high on the social VIX, and this is when the VIX on both sides means something, right? That we have to say that we are now in the social VIX past the 2020 COVID highs, and I can't fully explain it. You're just looking for direction and extremes, and there's a lot of comparisons to 2020. The tariffs can screw up the supply chain, much like in 2020. We've picked a fight with a lot of people. So the people on Stocktwits are kind of self-fulfilling now. It's a lot more negative thinking. And what I would say is, much like the regular VIX, when everybody's negative, right? Historically, there's a chance that when we look out 6 months or a year, that will have calmed down, and that will be a better time to assess whether you should sell things. So the important thing is to look for these things when they're accelerating and to not be the last one out the door in a panic. You want to be the first one out the door. And so a better time to have panicked here was like February on the way up. And that's how we're going to start using the social VIX, is just look for the people that actually trade stocks, not indexes, and see. So again, no index, no one thing is foolproof, and I like to apply, multiple factors to this. The risk here today is we just don't know what's going to happen. We never know exactly what's going to happen next. But combining the VIX, where the volatility is in the 50s and 40s right now, where the average range of the S&P is 4 or 5% a day, historically that just can't last. And if it does last, there's chaos in the streets. Your money won't mean anything. It's every man for himself, and it's a possibility always. So risk management matters. But generally, when you buy the VIX at extremes, and you look back 6 months, 2 years later at the positions that you put on, and I'm just going to say indexes for starts, you will be happy with your purchases. Okay, that's all I have to say on that.
All right, you guys can follow along with Stocktwits. We post that daily, Howard?
Daily. Yeah, the Stocktwits handle is posting. It'll be up on the site in many places soon. Again, it's not something you have to check every day, but when the market starts getting volatile, it's something to check in on. Yeah. Go ahead, Shay.
So I want to add some color to what Howard's saying, because it's absolutely valid, and that's why this year I might be getting some wrinkles in my face from all the smiling I'm doing, because when the VIX is this elevated, that's when I'm like, as a long-term investor, this is where the alpha is made. Because first off, the VIX, the way it's calculated, it's how positioning is for the next 30 days on the S&P. So if it's elevated, that means the positioning on the next 30 days, next term, is extremely bearish. So you have to ask yourself, when VIX is elevated, what's being priced into the market? Typically, people assume a catalytic event's coming down the pipeline. So there's going to be even more sell the news event, when no, the market's a forward-looking mechanism. And that forward-looking mechanism gets priced way ahead of the actual reality. So that's why the VIX is a great fear gauger on what is happening. So when the VIX hit a 50 handle just a week or two ago, that was the yen carry trade crisis high. That was a COVID high. It's hard to get more FUD in the current market than when the VIX hits a 50. Sure, it might be an 08 situation where it hits 65, But come on, the risk and reward once the VIX is at 50 is on the reward side long term. I don't know what this is. I want to say the profitability rate, but it's substantial. So yes, it'll probably return back towards the mean of 15. But even then, there's going to be some kind of a technical bounce, a short squeeze bounce, or a short covering bounce, and that's kind of what we saw. I think April 7th was a near-term bottom. Since then, it's been a technical bounce, shorts covering, because a lot was fear priced into the market. Where you saw over the weekend, Trump waved his white flag. So that was something that when April 7th, that was not the case. We didn't have a sandbox of risk we can factor into because there's no strategy being played right now. Everyone, the egos are just playing at each other of like, oh, you do 100, I'm going to do 200, I'm going to do 300, 400. Now we got somewhat of a glimpse of strategy by, all right, we'll put 20% and we'll give a 90-day window and then we can adjust. That's a glimpse of strategy. That's something that we just did not have before. So now we're up substantially this morning. I guarantee the VIX is going to get deflated. And that's why beginning of the year, every morning here, I was like, wow, the VIX is at 14. I'm going to buy hedges for September because hedging is cheap. I'm going to get ahead of it because in the first 100 days of Trump's presidency, I was seeing glimpses of there's going to be some volatility and choppiness, and at a VIX 14 handle is now reflecting that. But people want to buy puts and protection when they see their house is on fire. That's not when you buy insurance. It's not. You can't buy insurance when your house is on fire. You buy it to prevent yourself from freaking out and spiraling when it does catch on fire. It's the same thing on hedging your portfolio and buying the VIX and social VIX. When it's elevated, that means so many people are on one side of the boat that probably won't become the reality at that certain point in time.
Yeah, Shay, what do you make of? I know we talked about Trump waving the white flag, and I'm just confused. I'm trying to follow the talking points over the weekend. So Friday we got the glimmer. Was it late Friday, early Saturday? There was a formal announcement that I think had the word exemptions in it, and then by Sunday morning on Meet the Press and various social media, no exemption. It's a different tariff bucket. But it doesn't seem like the market was too fazed by the walk back, which kind of surprised me. So, I mean, do you think they were sort of just hedging language-wise, but it seems like people were going with what they heard on Friday?
Yeah, so I think structurally, we got a reduction from 145% tariffs to 20% tariffs. That's nice. That's substantial. However, I think when you mentioned like you're confused on the messaging, I think the panel mates of Trump is confused on the messaging because we're seeing conflicting reports constantly. Like Lutnick's remarks within hours after what Trump said is a perfect example of the circus of information we're in right now in this presidency. Like it's awful. Like they're just not on the same page. They don't have the same rhetoric. They don't have the same messaging. And we go from no exemptions to quiet refunds to temporary carve-outs all within a weekend. That's substantially going to cause some confusion, and the market does not like confusion. So, but the market's rallying this morning because we, again, got some kind of strategy, and we have a sandbox to play in that 20%. That's what we didn't have before, so we're going to be bouncing. However, I do think that waving that white flag, it kind of revealed to the world that the bond market is what's controlling all tariff policy, and that is deleveraging the U.S., which is not a great thing in the long term, or in this like battle that we're in with the East versus West. Because I guarantee once the 10-year hits a 5 handle, we already know what Trump's going to do. Like he is at the whelm of the bond market. And I think you obviously know China's seeing that as well. And that's why they're kind of manipulating the bond market, forcing Trump's hand. And you saw Trump capitulate within days after China's fuckery with the bond market. So
I don't think it's just China. I mean, it's very hard to bully
Japan.
the bond
It could be
market.
Japan too. Like it could be a lot of different nations. You're right.
I think when the VIX is 60, it's also many things. It's people, this is traders that smell blood in the water. So this volatility begets closures, rumor. You think the Trump White House can't keep a secret. Hedge funds can't keep a secret. This stuff leaks from trading houses. We had some kind of implosions of accounts, and you get this. Again, it's over most people's pay grade because it's just the same thing. It's just different people. but there is a trade that's gone bad. It could have been the dollar, it could have been a bond trade, could have been just the retail trade, Deckers, all these stocks, Home Depot, they're down 30, 40, 50% very quickly. And people get restoration hurt. People get on the other side of some of this stuff. Anyways, the we got to refinance the debt through the treasuries every, I don't know, few months, and there's 4 trillion to refinance. And it's not just the Chinese. We started up with the Europeans. They got to come to the auctions. You've also got so the thing is, everybody knows you got to refinance. What makes me nervous about Trump and the bond market is, this is the first time he's ever had to talk about the bond market. Why? Because he said it. He blurted it out on an airplane. Ooh, the bond market. It's like a new thing. It's kind of like the new thing he's going to be an expert in, because he's the president and he has to tell people that he's an expert in the bond market. The thing about the bond market is, you can't wake up one day and understand the bond market, right? Especially for a person, who, anyways, the point is, the bond market can't be bullied. There's schedules. There are so many bad takes about the bond market, but you can follow Joe from Bloomberg, Joe Wiesenthal, and he follows a lot of smart people in macro. And the point is, well, there's no necessarily expert in the bond market. The bond market was explaining to Trump in its own way that take notice, please. Like, it's not as quite as simple as you having a tweet power. You may be able to move the stock market, which he did with a few tweets. But the problem about him moving the stock market as he did was that trick is now out of the bag. Okay, you could pull it a few times. It'll lose its importance each time. It was a well played tweet. It was a well played, wink, wink. It's cool to buy stocks. The second, third time he does this, not as cool if it's not backed up with anything, right? I don't think it's as easy to do with the bond market, right? Because it's not trigger happy, indexers that have to buy, and so it's just, and it's not futures that can move the bond market like it does the stock market. So again, it's a much more complicated thing to bully, right? And rates are going to go where rates are going to go. I think the end game is, we want rates lower. Like, we could all agree whether we're like, or where we are in the country, right? I think some of the things we're not sure of, and I was, if you're looking for a home and you want to do upgrades, this China fight is not good. Everything you get at Home Depot or order for a renovation for your house is coming from China, right? So that's going to add 20 or 30% to people that want to upgrade their home. And that industry is just massive. If you take Home Depot and all the contractors and all the people that want to do upgrades to their home, etc., that's a huge blow to the economy as well. So again, there's a lot riding on the line here, and that's again why the VIX was at 50. The bet here is that cooler heads prevail, but this is the first time that we have, a true change in policy, right? Trump came in on this mandate that he was going to raise tariffs. No one should be surprised. I think people can argue how he's delivered it and whatever, and that's created the VIX 50 and 60 at this time. But the question is, he's not changing his mind. He feels he has the absolute power with executive orders to do this. He feels he can tweak the stock market up whenever he wants and fool the average person. But if we pull up a chart of Tesla, even Palantir, even with all the huffing and puffing, these stocks are down 30 to 50%, even after one of the biggest rallies, and let's call it a bear market rally or not. So we still have Tesla down 50%, right? And it's still down even after this weekend and this morning's ride, still down 10% since when Fox News basically, and the president ran a commercial for Tesla on the front lawn. So it's, this is a big company with global operations that's still 10% below, even after all the huffing and puffing, below where it was when they sold cars on the front lawn. So there's a lot still that's broken that's still reliant on what the policy is. All right, I'm done with that.
Well, yeah, you brought up Palantir briefly, Howard and Shay. I know your personal social VIX was up because you were tweeting a lot, but I spotted some news out of Palantir from you over the weekend. So they're up 7% in the pre-market, back in the spotlight. They landed a new contract with NATO for an AI-enabled warfighting system. So stocks catching serious attention from the retail crowd again. You've been talking about these guys for weeks and weeks. Is this the kind of catalyst that justifies the lofty valuation of Palantir?
I don't know about justifies, but I think even in this correction we've been in, Palantir has shown a lot of relative strength compared to other risk-on growth names out there. Palantir and the CrowdStrikes out there. Why is that? And same with Axon. Axon's showing a ton of strength. The new age of defense is absolutely real. The DoD budget is going to be evolving. It's not going to go towards, I don't know. It's not going to be any kind of like the old, weaponizing it. It's not going to be going towards jets, tanks, or missiles. Like it's going to be going towards software. That's the evolution of the DoD. Like it's not just to be any software right now. Like you're seeing. It's going to be the NATO's adopting Palantir's Maven program, which is going to be essentially the operating system of the West. And 6 months ago, they were piloting it. Now they're officially acquiring it. So this is a huge stamp of approval of validation that Palantir will become the AI operating system of the West. That's cemented this morning. That's why it's it's up 8% now pre-market. So I do believe like this kind of speed doesn't really happen in defense, and especially in the DoD, unless the stakes have changed, and they clearly have. Like the battlefield has shifted. It's in the modern defense. It just has. You can't tell me otherwise. Like the enemy isn't always visible anymore. The threats always aren't just kinetic. Like the winners won't be the ones who fire first. They're going to be the one who can see first, decide first, and then adapt faster than anyone else. Like that is a new form of defense, and this is exactly what all this deal is about from NATO. Is it's giving NATO a common brain, a unified platform that can fuse sensor data, run AI inference at the edge, automate the targeting, and I don't know, coordinate real-time decisions across 32 nations or 30. I don't know, over 30 nations with one interface. Like that's not just a PowerPoint briefing. Like this is a real common stack that's going to treat war like a live data set, and they just pick the platform to represent that. So it's a massive news.
So what?
Yeah, listen, I went to A24's Warfare yesterday on point, and it's just to sit through that and to see what these young people are dealing with in modern warfare. I mean, no different. I mean, I can't imagine what World War I and bunkers were like, but it hasn't gone much better other than we send less people in. We see we see where the future is, and Palantir is part of that future of drone fighting and software. Hopefully that's good. That means less fighting, but time will tell. I just think you got to remember these are all priced in. The stock's $95 today. That's been a phenomenal run for this company, but a $220 billion market cap. You've gotten the best customer you can probably get in the UN. Now they can upsell, right, and land and expand and all these things, but it's already assumed that they're everywhere compared to the market caps of other software. And so again, be careful of that. Like the market is, this company is executed perfectly, both from a PR standpoint and from a financial standpoint. Obviously, that's why it's a $200 billion company. And I think they've proven that we're a sucker for a great story too, and they've done great storytelling. Alex Karp's been able to keep out of trouble and win over hearts and minds. Robinhood's been like that. Now GameStop's been like that. Tesla obviously has been like that, and the American story's been like that. If you think about the QQQ, right, the whole America story wrapped up in the Nasdaq 100's been like that. But with comes great responsibility now. So I think you you've got to realize that you may have to look below the surface of Palantir and see who else is up there. But yeah, they're the front runner. They're it's a big account. I guess whoever brought home the account, it's like Glengarry, Glen Ross, whoever brought home this is the good leads. They're getting through the good leads,
But
and now
I mean,
it'll come. Now you got to go down a level of leads.
so one of the other names that, if you look under the hood, and now Howard knows this company really well, is Axon Technology, guys. Like, they're going to become the command center for public safety,
Yeah.
and that's, you're seeing right now through cops, but it's going to be through drones eventually. It's going to be through so many different applications where they fully adopted the Apple business model. We're going to sell you the hardware, but we're going to be really making our bread and butter in the ecosystem. We're going to store those files that all the cops have via the camera into this cloud system, and you're going to be paying this recurring price every single month that you're just going to be obligated to do. And that recurring revenue is going to increase and increase as you domestically expand your market. I'm not even talking the international side yet. Domestically, and then the drones is going to be inevitable. I'm sorry, guys. It is. It's unfortunate, but that's just the way the world's trending towards. So either you can adopt it, and Axon would be the control center of that, and then Palantir would be the operating center. That's the two different angles of it. But
Well,
Palantir, not
Axon isn't
$900.
making that. Axon partnered with drone companies, so they're not
Yeah,
actually making the
yeah.
hardware. I think the way to look at Axon, which is a great idea, again, it's not, it's just a 43 billion, and I say $43 billion company because I'm friends with some people there, and the president specifically is a long time Scottsdale company. And what's amazing about Axon is they're like a mini Oracle. So forgetting the military and taser and the vest and the cameras, right? So it's a hardware company. Excuse me, at some level. What's amazing about the company is their land and expand model. Like, we look at Oracle and people go, man, it just goes up all the time. But it's a quiet winner in that once a city or a municipality hooks up to Axon's cloud business versus Amazon or Google Cloud or Microsoft Azure, right? They trust Axon because they got to store all this information in a private cloud, right? So they've won that business, right? So they are their own. They have no competition. Obviously, they have the biggest competition in the world in Amazon, but the municipalities are going to go with Axon, right? They don't want to give the information to Axon or Azure, even though the bidding. So they've snuck in and they've created this private cloud business for all of municipalities, right? And you know what you can do with pricing when that happens, as long as you're not crazy about it. So they have this recurring. If you break out their numbers, they have this cloud software business, much like AWS has, right? So the business that's really the one that Wall Street loves, and the reason why you can buy the dips on Axon, is they have this business underneath in the cloud business with the municipalities, and that's not. They're going to take that and land and expand that through Europe and the rest of the world too. Let's say. So to me, it's a much better, you know, business than Palantir, right? It's a much more reliable Wall Street type of business. And so again, when this thing gets into dips, and I think it dipped into the 400, which is still not cheap,
Mhm.
but you can see the quiet, no one talks about it, but and I think this goes to Palantir's greatness because I know the people at Axon, right? And they're very local because it's founded here. Is they're not telling that story. They back in the '90s when they had Taser, they told that story a lot, and it didn't really help them. They became a story stock like Qualcomm in 1999. But this time around, they're just doing the work. They're wiring up the world with their cloud and with their products, and they're just getting shit done.
So, I mean, the market is open real quick, but the land expand I want to talk about for Howard that you just mentioned. The reason it's the same thing for Nvidia, guys. Like, Nvidia, first mover advantage for hardware, but now hardware is a commodity. Why do people stay into their pricey ecosystem? CUDA, that software component makes people
Yeah,
stay and not leave.
yeah,
For Axon, it's that cloud business. You're not going to leave, and also upselling on the land and expand. They have a product called Draft One, which reduces all the time for the reporting that police have to do by nearly a third. And they're obviously going to adopt that because they're using everything else in Axon's ecosystem. And that's exactly what CrowdStrike does as well in the endpoint security and all the module adoptions after that. This is where moats are formed in secondary, the networking effect. That's a networking effect. And those are the highest barriers of entry for any defensible advantage. And that's what Axon has. And that's why it's always going to have a premium multiple. It will. And that dip in 400, I didn't love the multiple, but like I was like, it's a $35 billion company. I truly envision this as $100 billion plus eventually because of that control that thesis I just created. And I was like, I'm going to be buying, and now it's a top 6 position for me.
Yeah, well,
And
kudos.
Palantir's
I
up
remember
10%
bringing
now.
it up and having the management come to some of our events for our fund, and they would tell the story, but I think people get used to indexing, and then people get used to the FANG, and then again, what this volatility will bring are other stories to the table that underlie, and you have to start thinking of law of large numbers when you think of Palantir, right? You have to start thinking about how many of these contracts are priced in at a $200 billion company. How many times revenue can you trade at? And that's where you have to kind of, go to this next level and start looking for other great companies. And the VIX also brings these to your attention, right? And we'll see how fast some of these great stocks bounce. Take-Two is another example. I haven't done the work here, but Take-Two is right back at all-time highs, and that's, I'm not a gamer, so you youngins may be able to tell me more about it, but that popped up on my stream too as something that's really fascinating because tech stocks are down 20-30%, but Take-Two, if you go back and look at an all-time charts, it's pressing up against all-time highs. So you want to start looking for things that stand out, not so much because they're down, but also because they're up. So keep an eye for stuff like that too.
Yeah, let's check in on the market. I will say the one thing with the Palantir NATO thing that was interesting to me is that, like, my mind went to, is this a case where the business world is like mending fences where politics can't? I know we've been threatening our relationship with NATO, but that Palantir being obviously a U.S. company cozying up to NATO, my head goes to, is that helping things with that relationship potentially? Let's look at the Dow futures though. We're opening 1.36 in the green, and the Dow and the S&P 1.84%, and Nasdaq futures 2%, rallying 500 points. Again, talking about those tariff exemptions / non-exemptions / sectorial tariffs, whatever they are, as we discussed a few minutes ago. Market's not super phased by those right now. Shay, when you're looking at the Qs today, where's your head at?
Relief. However, I'm not bullish, guys. I'm still defensive. Like, we kicked the can down the road. We're still 8% away from the 200-day moving average on the Qs. Like
Wow.
The Qs 200-day moving average is at 493. Like, we're at 463. That's a substantial delta that we still have to cover, and that's gonna take some time. And guess what? Earnings season this week. What's gonna happen in earnings season? And yes, we got 20% tariffs like just a couple days ago, but like really the back and forth and the amount of like confusion from the messaging, that's going to cause second guessing from the C-suite and enterprises. It is. I've been in those rooms, guys. Like, when you can't fully control your risk, you're going to A, be hyper conservative because you don't want to stick your neck out, or B, there's too much noise. I'm taking my guidance down until we get more clarity, more information. And that's the two options this earnings cycle. I don't think people are going to be beating and guiding up. That's not going to be a thing. Well, and I think that's going to put an anchor on any rally we've going to experience in the near term.
Yeah, I mean, let's turn to earnings because Goldman reported this morning, and they had a beat. They reported net income of $4.74 billion. Interesting trends in the equities trading was up year over year. Very weak in the advisory M&A activity, obviously soft IPO market, that's down 8%. But they are indicating that, Q1 was a good quarter, but they did indicate very clearly they expect Q2 to be a completely different story. And I think that's what you're getting to, Shy. I did see a new poll come out, CNBC this morning, 60% of CEOs think a recession is imminent. So to your point, it's that paralysis, it's the slowdown, and then, the impact of when we see that in some of the commentary of these earnings calls, and then next quarter's earnings calls, I think is when we'll really see it. Howard, do you have any takes on earnings this week, or Goldman, or what you're seeing right now?
Again, I think what I worry about here is we've taken there's two ways to go public right now, other than if you do a token direct like Trump has proven, right? So we need to treat, we're treating these institutions and, like shit, right? And there's good reason at some level, right? And 2008, we hate bankers. No one hates bankers more than me. But at the same time, we need them, right? For orderly markets, right? Until there's a better solution. And believe me, crypto's not it yet, right? And some orderly markets. So if we look at Goldman, there's Goldman, JP Morgan, and Morgan Stanley left. When I got into the business, there was 100 banks that could take you public. Is that the right thing? No. Well, we're now down to basically 3. And you know how many IPOs are going to go out in this type of market? We've been clamoring for more supply to help people, find the next winner. But when you treat the markets as poorly and as manipulative as we treated them, the IPO market closes. So again, we got to be careful what we wish for. As much as we may not like Goldman, we need these players, these businesses, these institutions to make orderly markets so that people have trust in our markets. And right now we're down to 3 banks. And, messing with protectionism screws up our own, demand for our own companies. So there is no IPO window right now, and that got shut, right? So we can talk about the market bouncing, but I know firsthand of, unfortunately for me, it's one of my, an IPO that's in my portfolio, but I'm saying this is just the cost of these hidden costs of what's gone down in the last couple months. And one of these is revenue to the banks. And this is employees that were hoping to go public this year that will have to push everything off until 2026. And those are expenses. That's just the money multiplier. So again, we can like or dislike Goldman and talk about it all we want, but we're playing with fire when we shut down the markets like this. And 2 did go out. Newsmax got out. Okay, and that's in CoreWeave got out. So let's take a look at those 2 IPOs, right? If you pull up Newsmax, which is back down to $20, there is no investor, unless it's you want to just be a cult, that needs to add Newsmax to their portfolio. Now again, God bless, they're public. People want to trade a really shitty financial product, which is Newsmax's, financials. God bless. But that's what went public during this shitstorm. The other one that went public during this shitstorm is CoreWeave. Now, I think CoreWeave is more interesting. And here's why it's more interesting. Because again, I think we need competition. So as much as we can make fun of CoreWeave's financial and the way the cap table is structured and should it even be public, the point is the banks huffed and they puffed and they somehow got this thing public, right? Which is kind of this patched together financial cloud, compute company.
GPU middleman. Yeah.
What's that?
GPU middleman.
It's a GP middleman, okay? So it's not necessarily the prettiest of ideas, but we could argue that as a middleman, it's okay to have another middleman, okay? It may not be the sexiest thing. And every bank is behind this, and they somehow managed to keep this. They've huffed and they puffed, and there's no way, if it wasn't backed by Goldman and all the banks, that this would be trading above $10, or it wouldn't have gotten public, okay? So this is one that people have to keep an eye on because they needed to get it public, they got it public, and somehow it's still above the 40. So there's still demand for this because of how important that sector is. It's really one that's interesting to watch. The Newsmax kind of went where you would have expected to went. People bought it, went to $160 for whatever reason. It's right back down to $20. This is a really important one. But my worry is if you can take CoreWeave public, then we should be worried about the 10 companies that should have gone public that didn't get public. And that's the kind of stuff where you can't measure exactly in the economy, but this is definitely an offshoot of policy. And you can't say you're for Main Street out of one side of your mouth and not before the 10 companies that didn't get public, that have worked really hard with thousands of employees, that were looking to monetize their stock, maybe buy their first home, et cetera, et cetera, et cetera. So these are the long tail stories of, the cost of these policies.
How long, how long do you guys think before, what needs to happen for the IPO market to open back up, I guess? How far, how far away are we?
We're talking about social VIX. Like, social VIX is probably really highly correlated with the IPO market. Like, there needs to be confidence in the market for you to fulfill the urgency to take your company public. And this environment, unless you're not a shitco, because like CoreWeave isn't a shitco, it just doesn't have a moat. Like, if you're a Databrick, if you're it's Stripe, if you're a SpaceX, which I don't think they'll ever go public. Why should they? They get everything they need privately. You're not going to go public in this environment, and like the tier 1 companies will not be going public. You'll get the other tiers, and that sucks. And I think that's also benefiting the names like CoreWeave, where everything else is a fintech commodity of a company, this weird media company. You look like you're incredible because everyone else who's been going public recently just looks like so shitty. That's like the benefit of CoreWeave. But like, I don't see this year being a year of a lot of IPOs, unfortunately.
Yeah, as I've been telling, we're a seed investor by day, and we've been telling our founders is like, hey, your job in 2025 has changed. It's to survive, and you're not going to get fired for making it to 2026. I mean, you will get fired if you think 2025 is the same plan today than when we started in January, right? You're really taking some risk. So your job right now is to think through what the world will look like and take 2025 year, not as a year off, but a year, and we're doing it at Stocktwits, right? Think about what the world will look like if Trump gets his way, if Navarro gets his way. You can't not think that that's now a possibility, right? And that's what the market's trying to digest. So if you're just a seed company and you're reliant on another round of financing and you're not thinking about that, well, then you're just not in the real world. So this, again, when they say it doesn't affect Main Street, it of course affects Main Street, okay? And it's up to founders and investors to not just watch. You shouldn't be watching the macro, right? Again, we're also forcing people to watch macro, and the dumbest thing for young people to be watching is macro, because it's very hard to understand. There's all these computes like bonds and currencies that young people, they just, what? Young people in starting out their businesses should be focused on their next 10 customers, not worried about the interest rates, okay? And of course, if there's a war, that's a different story. But now we have all these extra wars that we're creating financially that get in young people's heads. So this is definitely affecting Main Street. It's one of the biggest lies of this is that they're for Main Street. And if and CoreWeave is another example. CoreWeave is the least Main Street idea that could get public. Newsmax is the least Main Street idea that could get public right now. These are narratives that Wall Street can still at least get floated to the public. And what we want are companies like Stripe. Again, I'm not judging whether to buy Stripe or Databricks, but these are companies that should have been public years ago. And forgetting about them going public this week, they should have been public years ago. So we still haven't dealt with that problem. And now we've thrown in this new problem is another reason why I'd want to go public. Can I even trust the banks to support my IPO the way they supported CoreWeave? Okay.
Howard, I want to ask a quick follow-up on that because I think, to your point, talking to founders in survival mode, is it not the case that in times like this, 2008, 2009, that's when the truly, like a lot of truly great companies are born, when people are able to not just survive but thrive? So do you think there's a potential silver lining in all of this, that there will be a handful of companies just like breaking out against all odds and maybe being the next Airbnb and the like?
Go ahead, Shay.
No, I was gonna say, moats are formed when gut checks happen. when things are going bad and you don't just survive, you thrive. That's a gut check on you have something. You have a competitive advantage because the pieces on the board changed, but you're still going from point A to point B with minimal resistance. That's validating to me. That's something that, okay, everyone can say they have a competitive advantage or some mo, but if the macro is punishing you, but it's not killing you, that's something. It really is. And to go off of like, what would I tell my, if I was like in Howard's position, like, this is your investment year. You're seeing in big tech across the board, they're treating this year as like, I could care less about shareholder value. I'm going to invest as much as possible to get as much compute necessary so my AI workload won't be constrained anymore. Because the environment is going to anchor any kind of margin expansion opportunity we're going to do. So might as well get all the tools necessary in our shed so when things do improve, I can make some top-notch products when we do come out of this, because we will eventually, guys.
Yeah, I think you have to take again. What worries me is like that's why I told my daughter to invest when the VIX is 60. You know, this goes to mainstreamers. The idea of VIX is this rising panic, and you know who sells at VIX 60? Unfortunately, retail, right? And you have to go through a few of these to become the expert. And when I say expert, you're never an expert when you're nervous. Like the point of being an expert is it doesn't feel any better. Like where Rory hit those shots yesterday, or Bryson hit those shots. There's so many things that can go wrong on each shot. But in the market, when everybody's moving one way, right? Whether you're a golfer or a kid or a Goldman Sachs banker or the President of the United States, there is a different zig versus zag, right? And when you've been through a few VIX 60 situations, we all can become pros in investing, which is a few times a year or every few years when everybody's leaning one way, okay? And of course, there's that 1% chance you buy a VIX 50 and the world implodes. It just doesn't really matter. And again, you're not supposed to put your whole nest egg to work at VIX 50. But if you're a young person, the idea is to stay invested and then once or twice a year to add at these moments, okay? Now, the other thing is, like startups, like Stocktwits that we're doing, we're testing more products. Your job in a bear market or in crisis is to really lean into what you're good at, right? And polish those things. So at Stocktwits, what we're focusing on is AI, right? We have this time to catch up because the other thing that bear markets do is it keeps competition out of your market because it's hard to raise money. So in a good market, you've got to worry about all these extra companies being funded and all this startups happening. You've got to worry about your competitor down the street. Well, the good news about a bear market is everybody's freaking out. So when everybody's freaking out, it's time to gather your team and really figure out the one or two or three most important things, okay? And get them executed. Because eventually you come out of this bear market, and if you worked on the one or two or three things that are going to make you a more valuable company when everybody pokes their head out of the ground, you win. Okay, the same thing with investing, and it's the same thing with investing in stocks. Right now, if you looked at the all-time high list, it's very thin. It's gold miners, right? These are not the things. Now, if I was in the Egyptian Empire, this would be a bull market. Right? Gold is breaking out. I can redo my toilets. I can make them gold. I can
It's just
build a
rentals,
gold
guys.
pyramid.
It's just rentals. Those gold moves. Yeah.
Yeah. So it's not. So the market's telling you, hey, this is a good time to do some work and to try and find the next leaders. Right now, what we have are defense stocks breaking out, like Palantir and European. This is not good for the world, but it is. They are breaking out. And then there's gold stocks. These are not the growth stocks that you would want. But in a year or 6 months from now, you're going to be surprised. It could be Axon, it could be Facebook again. But I'm saying we're going to see companies start breaking out. And as I mentioned earlier, Take-Two is just one example. If the market is bottoming, the money will start flowing into what these new winners are. And this goes back to IPOs. Generally, they come from the IPO market, and we haven't had good IPOs in a long time. And by good IPOs, I mean companies that are in their growth mode still, right?
Like
That are
Anduril.
truly
Like
in the meat of their growth
yeah.
mode.
Yeah. I mean, there's so many great private market company guys. Like not just like the SpaceX is like we have Anduril, like that's a hot defense name. I think that's a great risk on barometer on IPO market when that goes public, because they do need funding for what they do. Databricks, the people I've talked to in Databricks, they don't feel the urgency to go public because they're in market share acquisition mode. And what do I mean by that? Like Howard kind of talked about it briefly, where there's so much of an art when you're in a publicly traded company where you have to factor in all these secondary effects that essentially provide a subconscious headwind into your business, because I can't acquire this product right now because I have to factor in what the response will be from the market, from the board, from shareholders. Like, what's my margin going to look like afterwards? Where if you're private, this product is going to substantially help our ecosystem in the long run. I don't have to care about all the secondary effects of it. That's what Databricks is doing right now, when the fourth industrial revolution is just getting started. Stage 2 of AI is just dipping their toes in the water right now, and you're seeing the effects of it in Palantir in the application layer. Snowflake is Databricks is seeing Snowflake, the tricky balance of growth, but also margin expansion on top of that growth. It's really delicate, and you're seeing their price action, like it's not getting reflected in their price action. So if you're Databricks and you're getting funded $60 billion valuation in the private markets, every round's an up round, why go public when you have certain advantages that you can do in private markets of just acquiring these great companies? I think they're going to acquire Confluence in the next year or so. Like, I think that's like an example of, like, they can acquire a $15 billion company, and it won't be that much.
Do you
of an
think they'll
impact.
acquire CFLT at some point?
Yeah, I think streaming data. I don't think it's a standalone product anymore. I think it's getting commoditized. Their Kafka is like by far the default open source in streaming data, real-time data, but jury's out there on managed source. It's not doing a great job right now. And you're seeing Snowflake already partner up with, I think it was Red Panda or something that's a competitor of Confluence. And now Databricks, in its most recent earnings cycle, Confluent announced they're partnering up with Databricks. So I think you're seeing the sides being chosen between Databricks and Snowflake. And I think Confluent will not be a standalone product. It's looking more and more like that. But Jamie Dimon and Mark, most companies I know, including yours, would rather be. Boom. It's true though. Like, there's a massive headache of being a publicly traded company.
Again, this is what I'm saying. Like,
it's crazy.
Yeah, for companies that want to go public, because again, some kids, it's like be Michael Jordan. I know there's certain founders that I know that wanted to go public. This is what you did. This was if you were a financial person, this was the dream. If you weren't an athlete, the idea was to ring the opening bell. Okay, and I'm not saying it's right or wrong. I'm just saying that was a dream for people. And is that dream dead? I mean, possibly because of crypto. But I mean, if our choice is a shitcoin direct from the president of the United States or another rug pull, no, I mean, I'm not judging it. I'm just saying it is what it is. So go look at the price. It's a fucking shitcoin. Okay, and I just think be careful of what we wish for, because don't get me wrong. Goldman, 08, these are not companies that are innocent. They're not innocent children. But at the same time, the markets are one of the greatest freedoms, and I think we're risking a lot of the things that made America great in trying to make America great again. And I just get worried that some of these institutions that we've kind of chopped the heads off, we may be sorry.
We have a few minutes. I want to talk about one institution that's in the news, that being the FTC, because Meta is going to court this week. Financial Times calling this an existential threat. This is an antitrust trial against Meta, alleging it bought Instagram and WhatsApp to stifle competition. And in fact, there are emails where Mark Zuckerberg says just that. Curious what you guys think about this. And Zuckerberg's been cozying up to the White House a bit. They're hiring people from Trump's campaign to be, I think, buddies of his on the board now. And so there's clearly chess moves being made to maybe mitigate some of this. And then you got the Google antitrust stuff in the backdrop, too. This just seems like weird timing, maybe fortunate timing for Meta, where it's like no one's really thinking about this right now. But Howard, are you following this at all? You have any opinions on this trial?
Again, like anybody, I think part of the fun of these shows and having talent like you guys rise is we all have opinions. My opinion here is probably worth less. The bigger the problem gets, the less any one of our opinions mean. right? Because we can't shape it,
Yeah.
right? But so policy is getting shaped whether we like it or not. The fact that he can tweet this out on a weekend, based on a 60 Minutes report, or in this case, we're talking about Instagram. In 2010, 2011, he was full of piss and vinegar, um, Zuckerberg, and it was a different era. And so even if he believed it was going to be a monopoly, the odds, let's all go back to that time, of buying a 19-person Instagram is going to give them a monopoly is ridiculous.
Yeah.
Because you're giving them too much credit. So, if you can get away with what people have gotten away with, I'm gonna go back in history and say, even if he believed there was going to be a monopoly, it's ridiculous because everybody mocked the acquisition anyways, saying they overpaid.
Yeah.
So I don't know. I worry more about, like, oh my God, I don't like CBS, therefore they should lose their broadcast license, right? It's just that bullying of institutions is we're taking away that just basic layer of trust, chipping away at the trust. The FTC has done a very good job of chipping away at trust based on their own actions, breaking up razor companies and doing really stupid stuff, and being far behind technology, right? And so I worry that the FTC is just behind, but I don't think it's going to be solved by an 80-year-old president bullying them, and I don't think it'll be solved at this point properly. Go ahead, Shay. What's your thought? It's a very hard take because it's just such a big issue.
Yeah, I'm even curious, Shay. I've never even gotten your point of view on Meta generally. I don't think we've ever talked about that one, just from a investment standpoint.
I think all the big tech eventually will get broken up. I think AWS would be a standalone business. I think YouTube would be a standalone business. I think Instagram would be a standalone business. It's just the way the world's going, where you can't become too powerful of a monopoly. Like, governments, it won't want that. It will get too powerful. And you can make the argument that they'll always just be powerful, just be more slice of the pie, sure. But you can't just have, it needs to be done. It's becoming scary, the amount of control some of these companies are going to have if we continue this momentum. It's snowballing into something that is going to be detrimental for the health of consumers and citizens. It is. So I don't know what the straw that's going to break the camel's back that's going to finally push it over the finish line. Maybe it's going to be something like, almost like you have to hit rock bottom for something to break. We haven't hit that rock bottom yet, which is scary because something's going to have to come that's going to be worse. But I do think 10 years down the line, 15, it's going to be a standalone business. Just kind of has to.
Yeah, you'd like it to be on their own. You'd like Google to realize that YouTube could be better spun off on their own, right? You'd like one of these companies to just say, hey, take the lead and say, listen, the sum of breaking this up will be worse than the sum of one. Okay, so it would be nice if one of the companies tried it on their own. They're not going to because it's not in their interest, right? So that's a problem.
Right.
The risk here is that ChatGPT, like, they're making moves that no one, just when you're not looking, something comes along, and that's the way technology works. It finds a wedge. Robinhood, Palantir. I mean, did anybody think you could build a $200 billion defense company when all we talked about was Boeing, Lockheed Martin, and Northrop Grumman and the like, and General Dynamics? So I want to believe that that technology on its own will break through and build these companies. You got to wonder how many more Robinhoods and Palantirs and Ubers we'd have if there was a better FTC. We could argue that one till we're blue in the face. I think it's better to argue price. This is why, again, it's like, if I'm talking about the markets, I want to talk about prices, because in the end, the prices kind of rule and tell you what's working. And an opinion shows you can talk about the FTC for 1,000 hours a week and get nowhere, right? Because it's just it's just mess of a blob of a subject that 99.9% of people just aren't going to be able to have an input over.
Yeah, I think that gets back to where we started the bond market of, unlike other topics where people are discussing, there's an action at the end of movement towards or away from certain things, and the numbers are there at the end of each trading day and even 24 hours now. And so there is a final scoreboard at any given time, and you don't see that in other places, which I think has been fascinating to just watch the market's reaction to things going on in DC. Guys, I know we got another big week of earnings. We got Netflix coming up this week. Any things you're particularly watching? I assume the VIX. I'll start with you, Howard, and then let you wrap it up, Shay. What's the foremost on your mind this week going in?
Is just to do less dumb things. When the VIX is high, I made, last week I mentioned that I would be a buyer. This week I'd probably, again this morning I wrote on Stocktwits that I was selling a little Robin Hood. It's just, we've had these incredible rallies off the VIX lows in certain stocks. So did the right thing. We put money to work when the VIX is 50. The right thing right now is, like I said, to look for breakouts, look for things beyond gold that are working. And so far, that's just defense. And then really start to see if the story gets clear from the White House, right? Right now, I think it's messier than ever. So the edge that I have is zero. So when I feel I have zero edge, it's just go back and do sales, do the work that I'm supposed to do during the week, work with the team, try and watch the market as little as possible. And the three things you want to check right now are what's the direction of the market, the bond market, rates, and the dollar. If the market is dropping and rates are still flat or going up and the dollar is coming down, the policy is going to change. That's what you expect to see. Those are the three things that I'm watching: is the dollar, in rates, and just the closing prices, not the opening of the market, but where the markets close every day.
All right, Shay, over to you. Howard is in the arena trying stuff.
So
I'm in the arena avoiding getting blown up. I mean, it's okay to say I'm in the arena, but honestly, I'm in the arena right now, not trying not to be run over.
Okay.
Yeah.
No, I mean, I love that you said that, because my sign off, if I ever had a sign off, was live to trade another day. Like, don't get greedy, guys. Don't over leverage yourself.
Oh, that's good, Shay. We need merch.
Regarding this week, it's a big one. Like, earnings season is my Super Bowl, guys, and typically it's been usually quiet period ahead of earnings season. We did not get that this past month, so I'm like, geez, now I'm gonna have to like next level up on listening to all these conference calls, and again, you need to listen to the conference calls this cycle. It's the most important earnings cycle in years. And you can go on Stocktwits, listen to the conference call there. Like, you have to listen to the verbiage, tone, everything is going to be found in the conference calls, because the numbers, they're backwards looking. They're going to be fine. But the tone of what they expect is going to be huge. And for this week, like, we have TSM, we have ASML coming on Wednesday and Thursday. Those are substantial companies for the semiconductor space, or the fourth industrial revolution. Like, you have TSM, which is, I can make the argument that they're the most important manufacturer on the planet. And then you also have ASML, who is essentially the enabler. So they both kind of sit at the center of this global compute stack. And I can say like they're going to be defining the pace of compute adoption. But it's not just the AI boom anymore. Clearly, like, something deepening is happening below the surface, and that's navigating policy. So I want to see what their management is on the conference call, what they talk about, how they are going to deal with the export controls, potential tech bans, subsidies, chip acts, tariff backlash. Like, these aren't all isolated events that they're going to have to, like, they usually have to talk about, but they're going to have to talk about this earnings call. So that's going to be huge on the implications of the new digital economy in the near term if these kingpins are screaming bloody murder. That's going to be a little scary. And then you also have Netflix reporting on Thursday, and that's probably the least effective of the Mag 7 or big tech for this tariff war. They're just their business model is in a way that it's minimal impact, and that's probably why you're seeing some relative strength in that price past month. So they won't tell us too much on how big tech's going to get affected from this tariff war, but it's going to be a nice glimpse. I think they stopped providing subscription visibility now, so it's now going to be a little fluffier than usual. It's probably going to be maybe a catalyst to show like it's not as bad as people feared, but that would be offsides, because Netflix shouldn't get impacted too much from this tariff war.
Yeah. Well, we will be here all week, 9 a.m. Eastern, live, streaming live YouTube, Stocktwits app, X. Howard, Shay, thank you so much.
Katie, good job. You are so good at this.
Me?
Yeah.
Oh, maybe you could tell Bryson that.
You are invited to the next LA golf event.
Oh, hell yeah. I'm in.
He
Okay,
made a
guys.
lot of fun. He really, I have to say this before we go. It's you will be more fascinated by him talking media than the athletic ability. He's very.
I don't know why you don't think I'm interested in his brain. I think you're jumping to.
Yeah, no, I'm saying
that.
like you think what makes him interesting is not that he's like this athlete, is that he's more a businessman and like he's in a lab. He's making YouTube dance. He's not just making the golf ball dance. He's making YouTube.
He's a well-rounded stud guy.
All right, let's get him on the show then. Let's do this.
I'm a little hot now. I'm a little hot.
All right, we gotta end there. We'll see you guys tomorrow at 9 a.m. Bye all.
See you, everybody. See you, Shay.
See you, Howard. Oh, we're off.
He's had enough of it. All right, see you guys.
See ya. Bye.